All right, July 9th, US 30. I'm recording live on Zoom. Um, I don't have a live YouTube capabilities quite yet, and that's coming soon. So I just want to go over today will be an educational video on the FOMC Wednesday. So why not to trade? Even more reasons. Yesterday was also brutal as well. Today there's some opportunity, but I'm gonna stick to daily bias in today's educational video, ICT daily bias, because you still had some opportunities here, even if say you didn't know it was FOMC when you stuck with your biased. Price can be uh really frustrating and not cooperative whatsoever. However, it does respect certain guidelines. So I'm going to feature today's video just on daily bias. As the last video, I featured an entry that didn't work because of daily bias. Okay, so we're going to stick with just the supernova entry for today. Um, we're not going to even really focus too much on the entry model itself, like this one here. That's a supernova entry. We're going to focus more on the daily bias and if there's confluence with the daily bias, why these trades are working out. So let's begin. We everything starts on the daily. Um, I usually go on the weekly as well on Mondays. Tuesdays, usually like Monday after the markets close, I go and I'll look to see what direction I think it may be going for the week. If there's any like fair value gap targets or stuff like that. So anyways, this morning, without even getting too much into it, there's this um 1 day fair value gap, so daily fair value gap rather, that is uh bearish. Okay. So you would have that marked out. Okay. We're gonna try to go over this quite quick. If you need, put some questions in the comments here. I'm going to be posting this on YouTube as well, and you can ask questions there. It sort of helps me out with the algorithm and all that. So um, we're gonna mark this in as the daily sell imbalance down here. Okay, so we got that marked in. Then we have, well, for later on in the afternoon or the lunch session or even the AM session here a little bit, you have this daily fair value gap. This one here, this fair value gap here is bullish, right? Again, if you don't understand why it's bullish and why it's bearish, you'll have to ask me and I'll have to try to explain as best as I can. I have to apologize. This channel is mostly for experienced people. I have some people in the community in my community for the Discord and teaching and all that and coaching, they're pretty much up to snuff on all this stuff. Okay, so I don't really offer um, beginner courses, or I don't even sell courses to be honest with you whatsoever. But I don't offer anything for beginners. I just want to take people who are almost there, okay, and take them to fruition because they're like either at break even or they're struggling and all this stuff. This is going to really help. And you can use this once again, Fair Value Gap by Nephew Sam. And this is going to really help you out. Okay. It's just, you should be able to see them, but I'm just using them on the lower time frame. So like when I'm trading on the 1 minute, for example, I can see them as they pop up, the 5, the 15s, what I'm mostly interested in because I already have these higher ones in for the day. And the 1 hour, you need to replace every macro as well, right? So, anyways, we've marked in the daily fair value gap, sell and buy here. Then you move down the line, okay? And you can see this 4 hour here overlaps with the daily. So what we'll do like with that one is we'll just draw it in as such, put the outline red, Or sorry, that's the body being too red. It's just so we can see it. Okay, we have this outline like that. And then we move down to the 1 hour, and you can see, like, we'll just find our morning trade, which is Wednesday in the morning here. It's all in this fair value gap, anyways, our biased. And that's all we're doing is we're just the times here. Okay, so we're gonna have to mark in some of this. Oh, my mouse has just died. Give me 1 minute here. I might have to replace mouse midstream. Jeez. Okay. Anyways, we have this 4 hour down here. I'm gonna mark it in down here because you can see price did enter it, right? So you can mark it blue, and then we'll mark this blue here. And this one, I don't think will really matter much. And then in the 1 hour, I don't see it mattering either. Um, let's see here. Okay, sorry about that. I had to change mouse. Um, so we've marked in our 4 hours, our daily. This 4 hours kind of kicking around in this daily, right? Bullish, bullish, price entered here twice, actually. Then we have our bearish, and we can get our uh bias for the day based upon that. Okay, so we're gonna go to the first AM macro, which is 6:45 a.m., and we're gonna mark it in. Oh, actually, I forgot one thing. I apologize. On the daily for your bias, this is very important. I actually forgot a key important part here. Okay, so what you do is yes, the fair value gaps determine the bias, your daily bias, but smart money buys in a discount and sells in a premium of the daily range. And I'm kind of giving away a huge secret there, like right off the hop, which, some people may not understand it, but some people might be like, ah, and if you focus on that high and this low right here, okay, and you mark the 50% mark with this was just a GAN box that I use, and you put it on the 50% mark, like as such, and I always put it in a teal line. So what we can do, sorry about that. I'm not really used to this mouse. It's actually working really fast too. 50% of the previous daily range. Okay, so what that does is what that tells you is when you're below the 50, you're looking for buys. When you're above the 50%, smart money is looking to sell. Institutions are looking to sell. Okay, because you get it at a better price, right? You get it at a premium price and you're getting it at a discount price. So if you stick to that rule, you will be, and you wait for the correct buys, you can hold trades way longer and you can do way better. Okay. And then what you also want to do is once you've done your fair value gaps first, we'll call this ICT checklist in the morning. Okay. So once you've done your fair value gaps to establish your bias, then you can go back to the daily and just start marking the previous day as I did with a GAM box. And then you can mark in your previous daily high. Okay. So I have that template, daily previous high. And then you can mark in your daily previous low right here. Sorry, my mouse again. Daily previous low. Okay. So, oops. Now that you have that marked in, you have a template for the day. And you can look at the narrative of what time it took out the high, why it's returning back into the range. You can look for sells after it takes it. You can look for buys after it takes the low. So it gives you it's actually well, it's a major point of liquidity. And for today, we're going to focus on the daily bias, kind of with like a checklist. Okay. And then in another video, we'll focus on that. So on the actual entry models and all that. So what we're gonna do is go back to the 1 minute. I'm trying to figure out why my mouse isn't working. It's a brand new mouse. There we go. And go to the first AM macro. Okay. And we're gonna look at bias today. That's all we're gonna look at. I'm not gonna explain the entry. We're just gonna explain the bias because we have all our biases marked in now for the day. And then we're gonna go in macro. We can even look at some out of macro. So you can see here that it's taken the daily previous high. Okay. And it it went pretty deep into the daily previous high because it took out all the buy stops that were there. That's why it came that deep. Okay. So it came deep, and when price was trading, we noticed that we were in a daily fair value gap and we were in a 4 hour fair value gap. Remember, we marked them out and they're right here. See, you can see daily fair value gap was in here. And then this whole outer edge with the red box right here was your 4 hour fair value gap, giving you a bearish bias for this macro. So we'll mark the macro in 6:45 a.m. Okay. And we'll mark it in green as in go, and we'll mark it in red as in it's time to stop now for that macro. So red here. Okay. This is a very important macro. There's a lot of volume. So you can see that the now I'm not going to go over supernova entries in this, but this is a supernova entry right here. Okay. Here's a short position right here, cross over the 50 here. And your stop loss usually is about 30 for supernovas. In this case, there is fair value above you, and this is a whole other discussion um, for another time. It's another entry. We're going to focus more on the supernova entry, which is on this candle here, and you can see that this paid out quite a bit. Okay. Paid out 241 pips. Okay. So you can see that the daily bias on this trade here really worked out well. Okay. And it did have this fair value above it and above your stop loss. And it was a bit of a gamble, but sometimes you got to roll on it. Okay. I just want to show the direction more than anything and work on an entry, like I said another time. So this one works well in this bias. Now let's move out of this macro into another macro, and let's line up our daily bias with our premium discount range and considering that in the bias as well. So you can see how price slides down below the 50% of this range right here. Okay. It slid down below the 50. So what does that mean? That means you are starting to look for buys. Now, that is the second part of the confluence because things will get a little bit tricky, and I'll have to show those on different videos of what happens when price is bullish and it continues to trade above the previous high. You can still look for, you're not necessarily looking for sells when it's above the high, you're looking for buys because price is bullish. But you have to know that when it does start trading above the previous daily high and stays up there, that your probability of trades are way lower, right? It's very bullish, so sells are dangerous. And yeah, so we'll talk about that on another video when that happens. So in this case, it slides below the 50% of the previous daily range on this teal line here, and it goes right into a second AM macro. So the second AM macro is 7:45. Oh yeah, and by the way, this is all in Pacific time. I forgot to mention that for those of you who are not in the that live outside of British Columbia. So here's the second AM macro, okay, in Pacific. And what is our bias here is we're trading in a bullish fair value gap, which is the daily. We are trading in a 4 hour fair value gap right here, okay? And then I think we went down the line and we couldn't find anything else. So our bias for the second AM macro is now a buy. Okay. Now, in this macro here, there wasn't a supernova because nothing crossed over the 50 here, this blue line being the 50. However, there was a smart money trade here, or sorry, I shouldn't say a smart money trade, rather a unicorn model that didn't work out. However, your stop almost went to break even here after the high. In this one, it didn't, and then this one here, it did, I think. So this second AM macro, there isn't really a trade other than a model that we're not quite looking at. We're only looking at supernovas right now. So we'll take that one out. So as you can notice here, we have a supernova that came out right here at 8:27. And you can see this is also another reason why you don't want to trade FOMC, right? Like this could have been a pretty decent trade, pull back into this PD array, and it could have went and it didn't. So it kind of stalled you here. Mind you, it came back and took internal liquidity out here. Okay. So this trade here is outside of macro. Okay. But the bullish bias is still remaining. Okay. And you can see if I use my measuring tool here on top of this candle, right? I should make it bigger here. Apologize. On top of this candle here, you get some points here on this. However, like you have this black candle that came out, and if you weren't at break even after the break of this high, you were stopped out or you were at break even. And this is just again FOMC nastiness, and I'm just showing the daily bias. Okay. So the third AM macro is 8:45, and I wouldn't really go past that. I do look at the lunch macro sometimes, but it has to be money. So 9:15 is the third one, and you're looking for buys here because you're still in this um bullish sort of gap here, the daily still. You're still trading in it. And here you can see here there's still no buy. Okay, you wouldn't want to be taking any of these sells. You can see the sell does not work out, right? There's a supernova right here. Comes into this 15 minute that's not here anymore, and it just doesn't work. It actually fills this gap, making it look like it wants to be bullish, and then returns down and takes the stops out of here. Okay. It's very nasty. Now, there isn't really another macro other than failed trades. There's this macro right here, which I don't like. It's a lunch macro. Okay, it's the last lunch macro, and it starts here. Okay, and so I'll put the green where it starts so everyone can just see clearly. And I'll put this right here. And you can see that we don't necessarily have a supernova. We have a kill shot buy, and we have a displacement rather right here at in macro. We've made a lower temporary low here, right here. And then we've displaced over this mitigation block here. Okay. Over this high right here. So this would be the displacement you're looking for, or what's called the market structure shift right here, displacement. We've displaced. If you had a tight stop here, let's just use this. If you had a tight stop on this fair value gap here, you were in trouble. If you use the body of this candle here, you could see it gave you some serious grief right here. If you had a bigger stop, like that's a 7.8 stop loss, I'm sure you're going to go a little bit bigger. Everyone can afford 20-point stop loss, and now it's below the range, right? That's what's kind of nice about this time of year is you can slide your stop loss in places like that, and it's not a huge stop. So if you were looking for a 1 to 2, or for at least to the top of this range right here, 54 points. If you're looking for the top of this range, where the 1 hour fair value gap begins, would be a good exit, would be here, right? So now you're looking at, a nice 1 to 3.24, right? And you can see that it took, I don't know, this macro was unsuccessful. There was no trades in that macro. There was this supernova here, but it was out of macro, and you kind of want to be in macro during FOMC. And you can see that this one right here worked. Now, it didn't. The problem with this trade right here is I'm not saying that I necessarily would have taken it. Okay. Like, yes, we're trading. And again, I didn't want to get too much into the entries and all that. Like, I want to keep this on daily buys and keep it like kind of short and sweet. I'm just trying to show how you see how the direction worked because you stuck to this. You're below the 50% of the previous daily range, and your bias right here is confirming it. So even though this trade, I'll just say what I don't like about it right off the hop is that it doesn't, you have this high, this low here, and this high here, and there's no liquidity being taken, right? And yeah, you're in a bullish gap, and you can kind of swing forward a little bit sometimes because that is liquidity. However, you do want to take some lows out. And you can see that, yeah, we did take these lows out right here. We took some liquidity, but to me, it's just trending down here. It's not necessarily taking a major point of liquidity out. Like this is external on the 15-minute here, and it's an old high, right? Or an old low, sorry. So anyways, I want to bring that up, but you can just see how even on FOMC, okay, you get these trades that are like that follow your bias that work and don't give you a lot of grief, right? This one over here did, but this one didn't. And if you roll the dice on it, which you did pretty good. Rolling the dice, that just means it didn't take out a form of liquidity. That's all. Um, it's still a valid trade. Um, it's just that this fair value gap is really big. So it's quite subjective what's going to happen in there, right? It's still going to take out internal liquidity. And I want to see at least the range of this high and the low be taken out before I take a trade. So there's that, and that's your daily buys. And you can see now it has run back up currently here at noon into this fair value gap. And again, I would not take any trades this late in the day. You don't know what's going to happen. So I hope that covers the daily bias and you understand that. Any questions that need to be answered about this, please ask in the comments, or I can make another video on it, and I will be doing it in my checklist in my daily trades live on YouTube whenever I get a chance to trade live, which could be tomorrow actually, because we're not an FOMC and I do see that you need 50 subscribers to trade live. So I'll definitely be on Zoom live tomorrow morning, Thursday. Have a great day and thank you very much.